Hey guys, it's Kevin. So I'm going to teach how I make levels today. Now, I want to say that there are some great people out there who teach level to level trading, um, and I love them, and I know them. I know some of them, and I think they're great people. But I want to just tell you, level to level and level creation is not a secret. It's not proprietary. I've done 5 masterminds so far, and every single mastermind uses level to level. And most of the masterminds I've taken turned out to be big waste of money because I didn't have anything really valuable to compare them to. So I want to just say, like, this is not secret information I'm releasing. Anybody who says that they invented the levels off of the hourly chart is kidding themselves, or I don't know. But it's not a secret. It's not proprietary. Everybody knows, every professional trader knows and understands how to make hourly levels. Now, I am going to take it further and show you how to make secondary levels after we make what are called key levels. Key levels are the hour to hourly candle marking of the hour to hourly trend change on the count. Blah. Key levels are Key levels are the levels we make off of the trend change on the hourly chart using regular trading hours only. Do not use pre-market hours or aftermarket hours or electronic trading hours unless it's like a futures contract on a name that only has electronic trading hours. They don't have, they don't close down at regular trading hours, which is the New York Stock Exchange. Um, but you can't mark levels with pre-market and aftermarket hours. So there are people who do though, and they have a much less chance of success rate because after hours has very little liquidity and very little volume. So the places where the after hours in the chart is happening, we don't want to put key levels on those because there's just not a lot of volume there. So we trade regular trading hours. And I'm going to show you there's 2 ways to mark your hourly levels, the key levels first. There's you work right to left, and then you work left to right, depending on where in the chart you are starting to mark. So here's ES on the hourly with regular trading hours on only, okay? And what I want you to understand is that, first of all, these levels are based off of the open of the candle at the trend change. And I'm talking about the open of the body. So when a candlestick, I'm assuming you all know what a candlestick, how it works. Candlestick opens here and it goes up, okay? So this case, this candle opened here, it went down, okay, and then it came back up and then it moved all the way up to here and then it came down and it closed here, okay? So we want to mark the open of the body of the candle at the trend change. Now, a green candle opens at the bottom of the body, right? And a red candle opens at the top. Okay, so if this green candle flipped red and went down, this level would still be in the same spot. Okay, so bottom of green, top of red. So let's go ahead and look at ES. And I'm going to start here on, let's say this is today. Okay, now I'm going to go on Trading View. I'm going to pull up my horizontal ray, and I'm also going to be using Alt J to mark my levels. And then I want to make sure I have this magnet on so that we can link it to the body of the candle. Instead of trying to like put it right on the tick of the open of the body, we're going to mark it by just pressing Alt J, and I'm going to go back, and then we're going to go forward. Okay. So this first off is just key levels. Okay. So the trend changes when the color changes. So we have green to red. And this is where the price rejected at the high of day. So I'm going to mark the top of the red. I'm going to work back, and here is the bottom of the green. and then we have another bottom of the green, okay? And I'm gonna work backwards, and I'm gonna mark the bottom of this green, and I'm gonna mark the top of this red because it goes from green to red. See, red to green, mark it, red to green, mark it, red to green, mark, gap down, green, 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 red, mark the top of the red, 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 green, mark the bottom of the green, okay? So let's go back a little bit more and get a few levels here. At this point, I need to teach you what invalidates a level, okay? So if I were to just mark, let's say, this level from green to red, this level would be invalidated because we had a close through the level with the body of a candle. So the body of a candle is what invalidates a level, not a wick, on the 1 hourly only, in regular trading hours only. So 5-minute candle closes through the level on the 5-minute time chart. That does not invalidate the level. Okay, so levels are only done on the 1 hour chart. You will be looking at them and trading off of them on different time frames. But strictly levels are made on 1 hour chart. I'm just beating this into your head because people often, it takes time for them to get connected to this and make sense of it. So if you don't understand it, it's very common. Don't beat yourself up. You will get this, okay? This is not complicated. It's very simple. So bottom of green at the trend change. Top of red at the trend change. Only mark on the 1 hour during regular trading hours. Levels are invalidated only when the body, not the wick, of a 1 hour candle closes through after the market is closed, meaning we don't invalidate levels until market has closed and trading is done. So we have, I'm gonna go back a little more, we have a level here, and then that's good. Let's move forward in time and say this is today, okay, and the trading day has now ended, right? And we want to, let's say it's morning the next day, and we want to mark our levels for the next day. So we're going to trade these levels from yesterday and what we have previously today. And I'm going to start playing the candlesticks that would be considered today. So we have 1, 2, we rejected that level there, 3, 4, 5, 6, rejected, 7. Okay. Wow, that was a great trading day. I always could have been playing long and taken a trade off of this level here on, say, the 5-minute chart. And then we came all the way up to here and we rejected this level. Okay, so now the day is over. This level here is no longer valid, so I'm going to delete it. Okay, but this level here, I'm not going to mark because this candle closed through it. Okay, so we just delete that level and we continue. Okay, so let's say, I wonder what's going to happen tomorrow. Well, let's see. It's now the next day, and we're going, I'm going to look for a bounce off here, let's say, or a rejection. Or if we break off this level, I'm going to try to play it to the upside. Maybe. Let's go. So it opens up. We get two kind of green but rejections, so kind of ranging there in the morning. Another candle, another candle, another candle. 7 candles. There's that day. None of this is invalid now because none of the bodies of this candle close through. Does that make sense? We do have a new level here though because we have green to red, and red we mark at the top of the body. So we have a new level. We invalidated an old level. We're going to move on to the next day. Where do we open? What do we do? Okay, we're maybe going to take a trade off of these levels up here. And that's it for the day. Okay, so I'm going to invalidate that level because we closed through it. And I'm going to mark the new levels. Did we get new levels? Yes, we got one here and we got one here. Got it? So this level right here has been pretty important because we rejected it twice now. And we almost made it all the way to it here. So we had one rejection, actually 2 if you count both bars, 3, 4, 5, close below it. I sense we're going to break out. So let's say day is over and I'm going, I would like to see longs off of this level if we can break through. If not, I'm not going to touch anything until we break to the downside, maybe off of this level, let's just say. So next day up, we're rejecting, we rejected, and then boom, hey, we broke through. 3, 6, 7, one more candle. All right, we finally broke this level. I'm going to delete it. And I'm going to say, do we have any new levels to mark? Yep, we got this level, we got this level, right? Bottom of green, top of red. So day is over. Oh, look at this beautiful setup here. This is money, and we have a gap fill coming, right? We could potentially gap fill. Now I would mark this as a level here, or potentially a secondary level, which we haven't done yet. But I love trading gap fills. So one thing I do like to do that is not really part of the level to level system, but since we're here, I'm going to mark it. So I grab rectangle. And I'm going to mark this to this. And now if you click on rectangle, you can set it to extend right. So that way, in time, you'll always see that, hey, there's a gap here that's eventually going to get filled probably, right? And so this would be a top watch for me, right? We're actually higher than this range back here, and we're working our way up. We also have a level here. So playing a reject off of this isn't my favorite because the risk to reward is so great on this side and not to this side. So let's say it's the next day coming up and I'm like, oh man, I want to go on this level here, right? So let's see what happens. Boom, reject, reject, boom. Okay, we didn't actually get a real good entry or a good movement, but we did make it to the top of this almost. So I mean, like if you did mark this as, even though it's technically red to red, gaps are pretty important. So we could have just marked this like that, or you could make it a dashed line or a different color so that you know, like technically it's not a red to red, but this is this is a level to me. This is a pretty important level, but I'm trying to keep this simple right now. We don't want to overcomplicate it with other stuff. Let's see if we get that gap fill. Next day, boom. Holy smokes. We are opening at the gap. 2, 3, 4, 5, 6, 7. We just filled the gap. Wow, levels really work, don't they? Great. This I'm going to delete. However, I'd like to mark the open of this one because that was an important move to me. Now, let's continue. We did also break this level here. See, we have this candle close, right? I'm going to delete that rectangle and I'm going to delete this. So, moving forward, we do have a level here. Oop. Okay, because that's green to red, right? All right, moving forward, rejected the level, rejected down, come up, blah, blah, blah. That's it for that day. Do we have any levels to delete? Yep, we got this one, and then we were going to add this one, this one, this one. Are you guys with me? Okay, next day, we open up here, and we go 1, 2, 3, 4, 5, 6, 7. All right, we lost a level, we made a level. Boop. Okay, we do have a gap here, so yeah, I'm going to mark it. That's a pretty significant gap. Probably going to come back and fill it unless we're just super bullish right now. I don't remember or know what's going on in the market back in the day when this is 2 months ago for me right now. So day's closed and we're going, let's see. Here, this is a gap right here. From this candle to here is a gap. So probably going to keep going bullish. I think we have a good shot of it, but let's find out. 1, 2, 3, 4, 5, 6, 7. Okay. Just closing on this level. I'm going to delete it. And you know the trick, you know the deal. This one, and I'm going to delete this one. All right. But we have a level here. All right. So You saw me start by working backwards, and now you've seen me work forward. So now I'm going to show you, actually before I do, let's just review this real quick. Mark the open of the green, mark the high, or the open of the red is on the top, green on the bottom. And the validated bar is when a 1 hour candle closes through the body of the candle through the level after market close. Don't invalidate or delete levels in the middle of the day. We're using the levels from yesterday to trade today, okay? And when the day is over, we're going to delete those levels and we're going to move on, okay? We do not invalidate a level if a wick is all that close through, okay? Now, I'm going to just say, to recap, mark the open of the body of the candle at the trend change only on the 1 hour. So here you can see I drew a trend change. I drew a trend change. All right. Secondary levels. Secondary levels are, we have, one reason to use a secondary level. We had a giant dump on a candle here, and this level is now invalidated. But this is such a big gap down that the amount of points from level to level to move is excessive than normal, right? Than say the average. So this also here might have shown up a couple of times in history. So when we zoom out on our chart, there will be times where you see that, hey, even though this level, like say here, has been invalidated, it still might be pretty important depending. This isn't a great example here, okay? But there will be times where you're going to want to use a level that's been invalidated, especially on large moves. There's also other levels that I don't consider key levels, but you might. Opening print is debatable to me. Sometimes it's great, and then sometimes I just see it chop all day on that level. I used to play opening print. I don't play it anymore. I do mark it though, and I personally mark opening print as a yellow level so that I can see this is a different level than regular key levels. So, for example, I would mark on the day, this is a level. Can't mark it because of this is in the way. So here's opening print, and I would double click and I would do yellow. Boom. But the next day, I'm deleting this level. Okay, so this is only valid for the day I'm trading. So once market opens and the bell rings, I mark opening print. Do I have strategies around opening print? Hell yeah, I have strategies. But this is not a key level because it doesn't last more than the day. Okay, it's just an important spot to mark for the day for many reasons that I'm not going to get into in this video. Okay, so let's look at here. We have an invalidated level here, and we have this giant gap here. So if we were to come back down, I don't think I'm going to shoot for this to this area completely, although it'd be really nice. I mean, gap fills do happen in a day, but this isn't a gap fill lesson. So I would say that maybe we need to consider putting a secondary invalidated level in here. And personally, this one is also a little tough, but I could say this to me, honestly, this is a really tough example. I'm trying to figure out where I would mark here, but I don't love any of this because we got this area, this area, this area, this area. This is repeating here, but I'm not wild about it. Let me see if I can find a better example. This would be a good example. So from this level to this level, okay, I would say this, nope, not a good example either. Yeah, okay, this level. This is a good level to consider marking, okay? This was once a key level, and I'm going to turn it into a dashed line, and I'm going to darken it, okay? So you can see this was the level in the middle of the day before it was cut and invalidated. Then we bounced off of it. You can see this pattern here starting to show up, and then we rejected it basically here, and it sits right between these two levels very well. Another one is here. Here's a good level. That's very good. It's like dead center. Um, you could just say the 50% mark between two levels. This over here, I would say this would be a good area to mark. And this, I really do like to mark gaps. And then is there anything in the 50% between here? Not really. Well, there is this. That that's not too shabby. I'd like it if it was like lower, but what we want to use these levels for is there areas to be aware of and look out because they're still relevant in time, and we don't have anything else to look for in these large moves. So what I like to consider is knowing that we might need to take a trim at a level that's been invalidated, and you can rate these levels. So like say a key level is a 5 out of 5. I would say an invalidated level is a 3 out of 5 or a 2 out of 5. 3 out of 5. Okay. They help us fill this area, and we could even say, hey, the space between this level and this level is so big that I want to just mark maybe the 50% region. And I believe this is the tool for that. So if I were to go here, okay, we have 53 points, and I could take this and just mark, see if I can just hit this. Yeah, just hit that right there. So I'm gonna just go boom. Oh, let me turn off the magnet for this. And I'm gonna hit that 50% mark, okay? So now I have a good idea of where the 50% is in this gap here between this level and this level. And I could also do that with this level. Let's just find that 50% point between this level and this level. Okay, and I'm gonna mark that. Let's just do it like this. Okay, so why is this important? Because we don't want to overhold a trade if our risk to reward is like already paying off. We want to keep our chances high overall of our trades. I'm not saying don't hold long trades. I'm just saying statistically speaking, you may want to just exit your position if you're already at a 3 or 4 R versus try to hold from this level all the way to the other level. These are important areas where market might react, and you need to be aware of those areas so that you can make better choices around them instead of just feel like you're in the middle of nowhere and the market's now starting to move around funny and you don't really know what it's going to do. Also, these levels do get reacted a lot. So it is very possible that we could break this level here, come down and literally just bounce right here and stop you out. So I would want to know going into this move that this is here because it could change how I decide to size my trade and where I trim. I may only go half position here because I don't know if we're going to actually be able to break through this spot right here because this is a pretty big deal. This is a gap. I like gap fills. Now, if we broke this, I would look for a short off of this 3 out of 5 level, but I don't always take 3 out of 5 levels. So it's just something you personally have to deal with, and it's just a tool to help you make better decisions. It's not black and white, but it's important. Another level that is a 3 out of 5 level can be the price that the market closed at on that day. Okay, so 1, 2, 3, 4, 5, 6, 7, that would be this. Sorry, let me put magnet back on. And these levels I mark blue. I will tell you, very rarely do I ever use these levels currently. Doesn't mean I won't later, okay? This one in particular is not special to me because we also have a level right here that's a key level, right? So this is just a tight little range on the day. I'm gonna move forward. So there's one day we invalidated this level. This level's major. Yeah, a level that gets tested a lot over a long period of time is likely going to become a 3 out of 5 level because it's been hammered in through time so much that price has been reacting to it over a long period of time. So I'm going to speed this up here. Let's do 3. So we would have a lot of levels being invalidated in this terrible range here. We don't want to trade, right? But you can see this level is very important. We actually just gap filled here, okay? We came back down, we filled here, and then we filled the second half on the next day. So you can get the idea of how you can see how important these levels are, okay? And we do not mark anything else like 5-minute levels, 15-minute levels, even like if they were different colors. There's just too much going on at once. And the simpler it is to you make your trading and the less options you have to look at. There's no VWAP on my chart, right? There's no EMAs on my chart. There's no indicators at all. I don't even have volume up right now. There's nothing because I don't want to be conflicted with my choices. I want to be focused on my execution and my setups and not be deterred by other people's opinions, even. Like there's indicators, there's VWAP, there's all this crap. You just should learn and focus on price action and do things slowly because trading it is a long process of going through stages. You will be listening to other people and then you will be listening to yourself. You won't trust yourself, you'll trust other people more. You'll make all these decisions. You'll hear people pull out shiny objects like I trade with the MACD and I trade with this EMA and I trade on 15-minute levels, and they have all this crap going on and they're not profitable and they can't prove that they're making any money because they're not. They're actually trading off of emotions. And most of these people who trade off of let's say EMAs, VWAPs, they don't have a setup. And that's going to be my next video is going to be about setups. They just go when this breaks VWAP, I'm entering. Okay, but that's not a setup. Okay, how soon are you entering? How many points away from VWAP are you entering? What happens if it pulls back? Are you waiting for it to just break even, or is there an actual candlestick pattern that you're looking for that is repeatable and you can backtest and calculate odds on? Right. So I trade level to level only. Okay, and my position size and stop size is something that I do personally for me, and I like to trade, let's say ES, with a 2.5 to 3 point stop loss, and I get a 4R before we get these, giant, like we get these giant moves, maybe once a week or twice a week on futures, maybe, and the odds of getting that and staying consistent is very difficult, especially if you're trading on a prop firm. So I hit my 1 to 4R in just a move like this. I will have a setup on the level and I will get out by here. Will I hold through this whole thing? I'm trying to step away from that so I can just grab my 1 to 4R and be consistent with my 1 to 3 to 1 to 4R trades. Sometimes it will be 1 to 5, 1 to 6, but my position size and setups and all of that, that's another video. So this is why we want secondary levels, because just one hourly key level to key level is not the strategy I trade with anymore, and it's not good for prop firms. So what I am trying to develop is a class and series on how to excel at prop firm trading and be consistent with your wins so that you can pull out withdrawals weekly, daily, and rely on a base income instead of hoping and gambling for a giant move one day that you might not even catch, right? So, or be able to hold through, right? Because that's another thing. That's a whole nother, mental game. But you can see how important, like right here, bounced off this level. It's retesting this level. It held here. It came up, and these are already invalidated levels, right? So level to level is very, very, very key in our trading, and it's the basic fundamental part of how to trade next alongside of, sorry, paired with setups. Do I use trend lines? Yeah, I'll use trend lines. There are times when I see something like this. Um, this is price compressing right here to here. See, it compresses and then it fails. Is it failing and I'll enter because it failed? No, but if it fails at a level, yeah, that might be that might be something I like, but I need a setup. Okay, I need a setup like that. Right here we have a 1-2-3 setup. Okay, so when this comes down and this pulls back, I would enter when it touches this level right here, this 2 out of 3, 2 out of 5 level. Okay, and it continued down to this level here. See, right, and it bounced off of this one, right, and then the next day we gapped up to this level. So that's how level to level systems work and how I trade. And I hope you found this valuable. If you have any input and you're watching this on social media somewhere, I would love to hear your comments and thoughts about it. And if you're in my private Discord, I am looking for feedback. And if you have any questions, I'll answer them directly. My Discord right now is available. So if you are interested in joining and learning how to become profitable at prop firm trading, please look at my bio. You'll find a link there. You'll find it on my website, kevincease.art. You should be able to make your way to the Discord and sign up, and I will do coaching calls and share all my strategies as I'm working on developing an entire mastermind right now that won't be available until next year. And people who are in the Discord now will likely get, if not a major discount, they will get free access as well. They're definitely getting free access as I build it. So as I build it, I'm releasing it into the Discord, and some of it on social media like YouTube, but not all of it for sure. I'll probably release like 20% of it on YouTube. So that's it for this video. I hope it was helpful, and good luck with your trading, and reach out to me anytime. God bless.